Thank you for joining us. This is the Traders Exclusive Live Trader Showcase. I'm Sherry. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. So before we get started, I will share the quick disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time, and past performance is not necessarily indicative of future results. Many thanks to our sponsors for the June Live Trader Showcase, Market Taker Mentoring, TechniTrader, and Money Mentor. Please go check them out at markettaker.com, technitrader.com, and moneymentor.com. Thank you again. I want to bring you Dale Elliot of Echo Traders.
Okay, and folks, I'm glad to be here. Thanks for inviting me, Sherry. I would love to have your questions as you think of them. So put your question in. If there's any questions that, no, I've lost my questions here. Just if there's any questions that that I haven't answered as we go, feel free to ask them again. Okay, so with that said, let's get going. What we want to look at today are swing highs and lows. Now, almost everything is based off of swing highs and lows. Fibonacci, for example, Elliot wave, for example, and support and resistance based off of swing highs and lows. Normally, a lot of traders will have a moving average. So you're going to pick a moving average that resonates with you. And we'll go into a few different ones, but we're going to keep this as simple as possible. And the other thing we want to talk about is placement. So a lot of times you're going to want to trade with the direction. You'll make more money trading, more money easier trading with the direction. Once a market defines a direction, even if it's not for all day, because normally it won't be, but even if you trade the present direction, for example, until it doesn't go. Okay, so what I want to do here is go to a simpler chart and just show you the setup. Now, the simplicity of this is any platform. So for instance, this is a Sierra chart. The trading DOM can be included on the right-hand side of the chart. So your y-axis on the right, and you have a field of depth for trades there. You can have your DOM separate, so if you wanted to, you could have it on a separate screen. All right, enough said, but the chart, let's go to a little bit simpler chart. And I'm going to move this out of here. All right. And all right. So today's date, we want to put up a disclaimer. If I can. All right. And any platform will have swing highs and lows on candle patterns. Okay. So with that said, we've highlighted the major swing highs and lows on this chart. This is the chart that you'll see in our trading room. Now we have the VWAP on here too. For all intents and purposes, you don't have to use the VWAP. It's a volume weighted price action as a average, but you also have your simple moving average, and this one is a 54. So you can use 50, 20, whatever resonates with you. All right, so let's go into settings here real quick. So we'll start with the moving average. And this is a angle based. You can use gradient, which is what I have here. So there will be a color change. So there'll be a slight gradient differences if it's about to change or maybe change, and then it does or doesn't. All right, so that's, and you have a number of settings. Okay, so gradient. This one is set up as a dash and a dash. And you can use whatever width you prefer, okay? You have to remember that a moving average is only an area, okay? So it's something like the center line on a highway. The price action is your most important thing. So like I say, let's go into inputs. So this is a 54. Okay, and let me see if I can grab a marker here. And all right, so 54. My question box is in the way. Let me see if I can move that. Okay. All right. So, like I say, whatever moving average resonates best with you. So if it's a 20, use a 20. For this presentation, we have practically a 50. So yeah, 50, 54, 20, 18, 21, you know, the number is approximate, okay? So a lot of traders use a 20 or a 50. All right, let's go to the next setting real quick. And now on some platforms, it may be called something besides settings. So it may be called indicator, stuff like that. Okay. So and we're not going to talk too much about the VWAP today. We've talked about it in the past. So I'm going to take it off. Okay. The bottom part here is the bottom band of the VWAP. The VWAP up here is the central or neutral part of the VWAP, but we're not going to display it. All right. So we're going to try to get a few scalps in today in this presentation to show you how to get into higher probability of entry areas, and then manage your trade accordingly. All right, let's go to the next setting. So swing highs and lows. So this one is your most important indicator besides the price action candle. You have to remember that every indicator that you put or use on your chart is going to take up space. So you want to minimize the amount of space that something takes up. Your price action candle, if you have too many indicators, for example, you can't see your price action, then you have too much clutter on your chart. Okay. So on this one, we have extend to further intersection. So when the price action candle intersects the extension line, and let me see if I can show you. On the left-hand side here, we have an extension line, and then the price action, that's this red, but okay, gets intersection, so it stops. Any platform has swing highs and lows. So this one did not get intersection, so it continued on. And then we had a classic case of a higher low and another higher low. Okay, very important, swing highs and lows. All right, so the setting is on a 3. And what that means is after 3 candles, the indicator is placed. You can have it on a 1, but you're going to have a lot of clutter on your chart. Okay, so I'm using a 3. Let's see if I can erase these. And let's go to your subgraph. So we're using a swing high 36, a swing low 36. A line property is in a dot formation, so a square in this case. You can use a point and that would be round. You can use arrows, whatever your platform will allow. Okay, enough said. You can come back and review the settings. Let's go to the so one thing I didn't mention on there. All right, so swing highs and lows. And what I have is a placard or a triangle up and down. Okay, so at the highs, I have a downward triangle. And at the lows, I have an upper one. All right. I call them placards from trucking industry. I was a courier at one time, so sometimes, especially if you had hazardous goods, you're required to use them. So, all right. So the next one is a on this chart is a Bill Williams fractal. You can download a fractal. You can have it in many forms. I chose to keep it just to highlight the more pronounced, the more dominant or major swing highs and lows. So that's all I'm using it for. So again, I've used it as a placard, and that's the smaller one inside the swing highs and lows. All you're doing on whatever trading platform you're using, whatever chart style you're using with swing highs and lows, you're just highlighting the high and low. That's all this here chart is doing, but it brings it to the forefront of where the price action is going. for instance, if the market is not taking out the lows, but starting to take out the highs, that direction that we first talked about is beginning to change. Now notice the moving average, and not everybody will have a color change moving average. Not every platform does it, and that's not really important. It's nice, but it's you can live without it. So if you put the moving average in a stair step formation or a dash like we showed here, it'll be a very similar. And when it's not stair stepping down, there'll be a little neutral area, and then it starts to stair step up. Also change in at least the present direction. All right. And the last thing on this chart is a countdown timer. Okay. So you don't have to have a countdown timer. And it's set on width, but you can have it count down or count up. All right. So you may have noticed that this chart is not a 1 minute. All right. So it's based on the number of trades. So this here particular chart is set on 900 trades. Every one of these candles, no matter the size, is 900 trades. Now, some platforms call trade candles as tick. Okay, for instance, Ninja Trader, they name the number of ticks, but it's the number of trades that are. So every one of these consists of I'm sorry, I moved some papers here. Let me get that fixed. Okay, so this is the countdown timer, and RT means remaining trades per candle. So 14, we're going to get a new candle right now. See the chart move forward. We have a new candle, and it started at 900. Okay, so let's get on with it. With that said, is the market taking out the highs or taking out the lows? So the price action is moving above the moving average, so you want to trade long. All right. And earlier we had a presenter, the first presenter of Thursday here, explained a lot of what I'm doing. His methodology is very similar. Okay. So let me get rid of a couple of things here. And Sierra chart, you have an undo as well as a redo, which not all platforms have. All right. So what you're going to see in our trading room if you come and visit, and I'd love to have any and all of you come and visit, no matter whether you're a beginner or a well-seasoned trader. Just come and visit the room. Send to support at Echo Traders a request to visit, and we'll fix you up with a couple of days, depending the week of your choice, and we'll find you a seat. So Any questions that I haven't?
For a
Question
second,
box.
Dale, I wonder,
Go ahead.
were we supposed to have a live chart all this time?
Were you, what? You're
Did
not
you?
seeing the chart?
I see the chart. I just wondered if you meant for it to be on the chart all that time. I heard you say something about how something looks.
Uh,
Right
say
now?
yes.
Okay, okay, sorry. And
So you
if you got,
saw me drawing on the chart? You're looking at the right chart?
yes. There's a
Okay.
black arrow at the bottom, right?
There's an arrow at the bottom.
Yes, okay, so, and it's moving, so it's live. I just wondered, I just thought I heard you say something about getting a spot and that I didn't know if maybe you had switched screens, that it wasn't showing that. That's all.
Oh, no, I mean, to get a spot in the trading room, just send a request to support@ecotraders.com.
And guys, I
And
did post that email address in the chat.
yes, I see it. I think everybody can probably see it. But we'll go through that at the end here too. We have a special price for those who are here today. And so if you want to, now we'll go into the price and how much it is at the end of the presentation. It won't take long. It's $2 a day. So anyhow, we'll go into that. So with this here, I don't know if the mouse is very big, but let me draw with a marker. Can you see the marker here? If I draw a stick person, we're looking at the right thing?
Yes, and it's red.
Yes, okay. All right. So the cursor is a little bit smaller. So it's a little bit hard to see. So with everything here, the question box is in the way. Yeah, I saw that. Empty field, similar. All right. So those are questions from the prior presenter. Feel free to throw the questions at me as we go. Like I say, sometimes you'll think of what time frame or why is something the way it is. Throw the question at me. Okay. And now I don't know if we have the questions to the upside. Maybe I'm looking at the bottom side here. Just a second. Okay. And let's erase that. Now, I'm going to just move the chart a little bit to the left here. And what we're looking at is the market has put in a support. The moving average has changed color. So the stair steps on the moving average are to the upside. All your pullbacks are ideally the best place to enter. All right. And the higher probability trades will be trading with that direction. So for the time being, it's to the upside. So you want to trade long. Long entries, in case you make a mistake, should be at the bottom. So you say, how do I get there? Okay. I'm going to show you a very simple solution to that question. And whether you join Echo Traders or not, you can remember this extremely simple entry. Okay. And the best place. We call it the best place to be wrong. Okay. So the best place to be wrong is after you have a swing low. So you look on the left-hand side here, and see if this here little dot helps. On the left-hand side, we have a low. We have our color change. Your price action is above the moving average now. Okay. So how do you get in the best place, right? Of course, we always want to be in at the very low, and you may not pick the very low at the right place. So in the room, we'll show you a number of best places, and one is right here. Okay, so the market has moved to the upside. It came back down, it tested the moving average, did not break down through. So it's becoming not the moving average, but support is developing, okay? Because there's no support in the moving average. It's like I said earlier, it's just an area, all right? So here, I'm going to grab a yellow dotted line. So from this swing low here to this swing high, you use about halfway. All right. And whoops. Let me just try that again. So we can add a number to that area. So if you entered at 64, for instance, or lower, because you can see the change in direction way before this, but you're looking for the pullbacks for entries for that direction. Okay, so we said the direction just here approximately 1 o'clock has changed. All right, so from 63 to our high here of 86 is 64 to 86 is 22 points. Okay, so it's $48 on the micro. All right, so this is E-mini NQ micro, E-mini NQ. All right, so you've reduced your risk. So especially for small accounts, you want to reduce your risk, you reduce your quantity, and just trade and build that account. So if you're rebuilding an account, that'll help you too. All right, let me take a little drink of coffee here. Okay, so there will always be a move up and a move back down. Okay, always. So for instance, this move back down off of the high, whoop, I'll grab a line here, off of the high to here, we have a swing high and a swing low. Most important on your chart other than your price action candle itself. So the market should come back down to about halfway. So pretty well self-explanatory, right? So at that halfway mark, we're looking at, is this here going to become new support? All right. And it's kind of a slow moving day today, so it may be just ideal for a presentation like this. I talk a little slow, the market's moving a little slow, and that all seems to be in the cards today. So when the price action was moving up and we look at continuation, then we want to see the price action continue to move. Now, small risk, I'll turn that little bell off. Let's just take off this one and we'll change it with a number. So approximately halfway, right? And what you're going to look at is all the swing lows in this case. If we take a peekaboo at the swing lows, just let me grab an arrow here. Okay. So this swing low was followed with a green candle, which took out the top of the red candle. So we're talking about placement. So we talked about swing highs and lows, and we talked about the moving average. And our last point, bullet point here, is the placement of your candles. So if you're using a red and green or a black and white chart, or maybe all your candles are the same color, okay? Now there's an advantage to having all your candles the same color. Maybe red and green are faking you out, all right? Then neutralize that point to become a better trader. If the color, if you're chasing after a color, stop doing that, okay? Then change your candles to all one color. All right, so placement of candles are extremely important. The larger candle and the color of that candle in this on this here chart is going to tell you a huge amount of information. These are also, I should mention, and let me just go to the chart here, is the type of candles. So in this column, you can see candle price volume bars, okay? That's what's checked. So I don't have a volume indicator at the bottom of the chart taking up real estate. Very important that you see what you need to see. So like I said, the more candles you have, so if you have a MACD, for example, those will all take up precious real estate. All right. So this here red candle that I'm going to put the white arrow on has taken out the green candle. Okay. We're just left of center here on the chart. All right. So placement, exhaustion to the upside, and the larger white arrow has taken out that green one. Now, it's not always as clear as that. Sometimes the market does not use just one candle to take out a move, a swing. All right. Sometimes it takes 2 or 3 candles or a group of candles. All right. So for instance, on this next one here, we had exhaustion to the upside, but it took more than one candle to do that pullback. Now, I want you to also take a look at what is happening on our chart. We mentioned the chart should pull back into about 79, 78 area here, and we put a marker on here of 079.75. If you entered at that to the upside, you'd be in some money. And how do you know that? Well, you'd be trading with the direction, the simple direction, right? The simple direction has moved positive or to the long side. All right. So even if your trading platform doesn't have the little nuances that this here has, we have members that will clock into the room. They may only be in the room for an hour or two, depending on their trading schedule. And, you know, if they're working a full-time job, a part-time job, and just doing this on the side, for instance. So we have members that'll sign in, sign out. All right. But they'll get to see a direction and then maybe place a trade and just go with that. Okay. So this chart, you have swing highs and lows. All right. So you have a direction. And in hindsight, it's pretty easy to see. Everything is easier to see in hindsight. This is the futures market, and the most traded, I think. You have Forex heavily traded, and you have futures, and you don't have to own a stock. But this simplistic trading chart applies to stocks as well. Okay, if you can put a candle chart on it, this is the one. Mark your swing highs and lows. What's dominant? All right, so major and minor. Okay, now we have extended away, and we must look at what is, let me see if I can just change the color to, let's see if we can just, let's use a black marker here. Okay, so you have a double top or a pincher top, if you will. All right, so a resistance area. And then the market has moved down. This here red candle, the placement of the green, exhaustion, wick at the top. The longer the wick, the more resistance on the upper side. The bears have jumped on it and pushed it all the way down. For instance, down here, the bulls, this here was a red candle here in the center of the screen, and the bulls continued to push it to the upside. Okay, so wicks at the bottom are mostly exhaustive to the downside. Whether it's red or green, it's exhaustive to the downside, and then you'll have a pullback and a move for continuation. Okay. Any questions? I'm not seeing any new questions, I don't think. All right. So have I explained it that well? Maybe I put you to sleep. All right. So let's.
So Dale, IQ would like to, do you do micro or mini?
There's very little difference between micro and mini. There might be one tick at the swing high or low difference between one chart and the other. So this is a micro chart. but your mini will be very, very similar. Okay, so whether you trade micros or minis, you're by trading micros, you've reduced a little risk because, of course, you've also reduced the profit per tick, okay, or profit per point. All right. Now, so I hope that this is a micro, so I hope that answers that question. And it's a good question, whether you're trading micros or minis. As far as to the other, they're almost identical. Okay. And another question that I get sometimes is the time frame that you're trading. So we recommend, like, if you're going to trade in minutes, maybe a 1 minute or a 2 minute chart. I used to try to trade a 30-second chart, and it's moving pretty fast, but that's a long time ago. So anyways, if it's a minute chart, I like the number of trades. So let me go to chart here again. And so this here tells you the type. It's micro, E, mini, NQ, and I've labeled it as a scalper. The bar period, if we go to bar period, and you're going to notice, now I changed my marker to black. Let me change it back to, let me see, I go to color. I'll go back to, let's go to white here. So number of trades per bar or per candle. Each candle is considered a bar. So we have 900. And this is where you'd change your time frame, as you will, okay? So hopefully that explains most of that, okay? So it's a 900 trades per each candle. When the countdown timer is done, we get a new candle. Now, if you had a minute chart as the it would display the same thing. Okay. And you can have a timer. Ninja Trader, for heaven's sakes, has a timer. All right, so with this done, let's just erase most of this stuff. And let me get rid of this. Any other questions here? So we have about 15 minutes left here. And let's see if what we have. So we have a resistance area. So a swing high, you know, and we have the price action, like we mentioned, we had that little pincher top or double top. The wider a double top is, the stronger it is, okay? So for instance, if you have a double top, say 5 minutes from when you get one to when you get the other, that's a strong period, all right? But if you have a double top that's 15 minutes between one high and the next high, it's stronger than than a 2-minute double top, okay? Because double tops always get re-challenged at some point. Same with double bottoms. So entry short, I prefer off of the highs. So for instance, double tops, higher highs, or lower highs, okay? And vice versa for entries. Long should be off of the lows, double bottoms, higher lows, or lower lows. Once the market puts in a resistance area, it's going to look for a low or a pullback, okay? I want to take you to a little different chart, the one that we use majority of times in the room. And the only difference, and you'll see very little difference, but the only difference is we have target areas that the chart puts on, okay? So just kind of take a mental picture of what you have here right now. And then imagine if what you had, I'll pull it back here, had some markers and indicators on where you should trade. Because I'm in the trading room for a large portion of the day, but if I'm out and you sign into the room, you want to have a target. So our chart generates target areas, okay, and retest areas. All right. So again, we have the VWAP on here, but you can kind of ignore that a little bit. They're trading the VWAP is from above. You'd look to for taking profits to the downside, and vice versa. When the market is coming to the upside and our moving average is trending. Let me see a arrow here. Is trending to the upside, then there's a higher probability of moving above the VWAP. I didn't think I was going to have time to do any kind of presentation on the VWAP. So then you'd take your profits up in here. Okay. Now, let's go to undo some of those. So the best place to trade short is off of the pullback to the upside. All right. Notice your placement of the green candle here has taken out the red. So we have support here is trying to develop here at the low. All right. So it never hurts to mark your support, as well as we already knew that resistance had developed up here. And then we got a lower high. All right. So we look for the market to return to this area that I'm going to show you now. All right. Okay. Now, this can make a huge difference in your trading once you see this repeatedly throughout the day, because that's all the price action, all the market does is puts in swing highs and lows. So other than your price action candle, the most important thing on your chart is a swing high and a swing low. From that swing high and low, you will begin, if you haven't in the past, to recognize resistance areas as well as support areas. And they're developing in front of our eyes constantly, okay? So we expected to have the market return to this area, especially off of the placement of the red candle and the green candle. All right. So for instance, this green candle was a very bullish candle, but the placement of the red, if the red is at the high, it's bearish. But if it's at the low, it's exhaustive. Okay. The market put in the resistance area. It's going to look for a low. So our resistance area is 0.90 and a quarter, and it came down into 0.66 and a half. Right? So what's that? 23 and 3/4 points. All right, something like that, whatever it is, if my math is serving me well today. All right, so if you're going to look for the market is where would you want to trade short from? Okay, you would want to trade short from this candle here, this direction. All right, and we call it the best place to be wrong. So if we're wrong trading off of the high and the market goes against us, so for instance here, I'll put a marker on here. So somewhere approximately here at 83 and a quarter or at the berry swing high, you have very little offside. So in this case, 2 ticks, half a point, you would trade short because we expect the market to come back to that area. And how did we know? From our swing highs and lows. And that's because you're going to put them on your chart. That is pretty well all that needs to be said. These are very important. Not this one. You and I don't get in at 19,090 and a quarter unless you're hit by lightning, right? You may have gotten in there, but chances are you and I do not. But can we get in at 84 and a half or 83 and a quarter? And what does that go to? Well, so far, 0.70, so 12, 13, 14 points. All right. Any new questions there? So the market is here we come. Let me just erase some of these things here. And the market should stumble, okay? Should come into some support and maybe fade on its momentum. And we look at prior swing highs and lows to see that. So it should fade roughly here. And you can see it's attempting to press on, but it's having a hard time. All right. So it's very important to mark swing highs and lows. I'm using a simple rectangle to show the support area or the resistance area and which one will get re-challenged, etc. And so use your swing highs and lows. Now, my time is just about up. I want to take you quickly to our website. Here we go. All right. So Sherry put in www. Ecotraders.com. If you would, please, thank you. That'll take you to our website here. It's been, and if you go to Showcase Special, takes a second here. Come on, baby. There we go. Okay, and in here you'll have a discounted area for. Let's see, I have white. Let's see if I can get a marker here. I'll go back to red. So our regular monthly membership is $97, and we've discounted it for those of you in the webinar this week. Okay, and that'll be on. We'll keep it on for another week or so. So this year you can save more money if you get a yearly. If you say there's 250 trading days a year, this $4.95 is about $1.98 per day. Okay, of your trading days, 250, half of that, or as is the amount there. So if you round it off 500 per month and you have 250, you get $2. All right. Any
Per year, right?
questions? Well, that is per year. So I think it's $41 a month or something like that. And you have approximately 22 trading days per month. So that's where you get the $2 per day. Okay. So,
all right, guys, you got any questions? We're running out of time, and I know our next speaker is waiting.
So if you want a trial period, just email support@ecotraders.com and we'll find you a spot there. I hope you picked up something today, what's important and what resonates with you. Then that's the way you should set your chart up. Swing highs and lows. Simple. Every platform. All right. Adios.
Many thanks to our sponsors for the June Live Trader Showcase, Market Taker Mentoring, TechniTrader, and Money Mentor. Please go check them out at markettaker.com, technitrader.com, and moneymentor.com. Thank you again.